All right, we are live. Welcome back to Stock Tricks with Nick for this week's Midweek Movers live stream. Not a great day in the market, right? We gapped down, pushed a little bit higher at the open, hit that 50-day simple moving average that we'll cover in a second here, and then just continued lower. So with that happened, when that happened, I went all to cash, got stopped out of my last couple positions in AMD and Upstart. And now I'm just kind of sitting on the sidelines waiting for things to set up. So in this live stream, we'll be going over the S&P 500, NASDAQ, excuse me, ARK, take a look at some of the sectors, some of the industries, and then break down 12 stocks that are showing good relative strength that I'm watching, and then take a look at any charts that you guys want to see. So I have AMD and Tesla requested from Twitter and StockTwits, but if there are any other charts that you guys want to see, make sure you drop them in the comment section below, and we'll get to each of those. If you also have any trading questions, anything like that, use the comment section, and we'll get to it. All right, first I wanted to start with a look at the sectors. So very, very red day. We're looking at FinViz right now. The only thing that held up relatively well was energy, down 1/100% today. Not bad. Everything else really red, with technology and growth stocks really taking the brunt of the force. You can see on a 1 week performance, scrolling down in a second, energy and financials are still green. So those are the strong groups that are soaking up the money as everywhere else kind of bleeds lower. Taking a quick look at performance of the industries, utilities, aluminum, recreational vehicles, all green on a hard day. Same with oil and gas. So back to that energy theme. And just scrolling down, the worst that we had was semiconductors, equipment and material. And that had been a very strong group in the past. So we're starting to see some tides turning, and we want to be careful about that. So let's jump to the E-Trade platform. Whoops. Let me get over to it. There we go. And then take a look at the S&P 500, NASDAQ, IWO, and ARKK. So S&P 500, we were in that strong uptrend. Last September we had, or that's March. Last September we had a very similar kind of, we pulled back, broke under the 50-day, and then we had to work and kind of put this base together within a month. And then we started back up on the uptrend. So is that something that we're going to be seeing? Maybe, who knows? But we're definitely in caution mode. We pressed lower, pulled back, let's see, 5.8% from the high. We bounced, so this was Monday, right? Yeah, last Monday's gap down. We pushed lower, but then had that strong close at the end of Monday. And then since then, we had higher highs, higher lows, all the way up until basically last Friday, closing back above the 50, above the 8, but still under the 20-day moving average for the S&P 500. On Monday, we had an inside candle, but a lot of the tech stocks were showing weakness. So this is the S&P 500, but we had an inside day on Monday. Still nothing like crazy bad in the market. Then today, we opened down about 1%. We opened right at that 8-day exponential moving average, and then just pushed lower all day. S&P 500 still higher than that Monday kind of flush last week, but definitely not looking great going into the rest of the week. Big selling volume as we did that as well. All right, next we have QQQs. So this is the NASDAQ, similar kind of story. On last Monday, we had that push down, but then bounced back, pushed a little bit higher. This one shows Monday lower lows, lower highs instead of the inside day that the S&P 500 saw. And then today, let's measure that. We gapped down 1.3% at the open and then pressed down 2.8% on the day and on very high volume. So just like when we gapped down on higher volume last time, we bounced with lower volume, kind of tricking a lot of traders getting back in. We were all conditioned to buy the dip, buy the dip, buy the dip, and now it looks like this is going to be a little bit more of a kind of buy the dip moment. We're well under the 50-day, under the previous low, and we do have a decent amount of room until the previous base breakout at 340. We also have the 200-day simple moving average right around there. So if things really get bad, look for support about 6% lower. like I said, right now I'm all cash, trying to trade defensively until I see some things breaking out without me and running, holding those moves. I want to be trading cautiously. So that was QQQ. Let's take a look at ARK. This is something that I use to kind of track the growth stocks that I trade, Kathy Wood's fund. This chart really shows how difficult it's been trading since basically February. Growth stocks had that strong pullback. This fund was down 40% or so to May's lows. And then it looks like we were kind of building the right side of the base, tightening up. And now we're flushing even lower. So we had a double bottom. Is this kind of a triple bottom that we're working on? That would be nice, but it's a little bit too early to tell. Not something that I want to gamble on while everything's breaking to the downside. Similar to S&P 500 and NASDAQ, selling off on higher volume today and closing near the low of the day, and this under the lower Bollinger Band. So when those Bollinger Bands are constricted and we get a close near the low of the day under the lower Bollinger Band on heavy volume, that typically points to continuation in that direction. Just how if we go from that constricted Bollinger Band and then break above, close at the high of the day with good volume, we get to see continuation higher. This is showing some definite weakness in the market. And then I wanted to go to IWO, but yeah, you can see on Market Smith's chart, we had that chop zone. This is the Russell 2000 Growth ETF. We've been in a chop zone since February, and today's candle, we're under the 8, 20, 50, and 200-day simple moving averages. Not a great time to be in stocks. Excuse me. All right, so that's a look at the S&P 500 and some of the indexes that I follow. We just took a look at the FinViz group. So next we'll be going over 12 stocks that are showing positive relative strength in a tough market that I'll be keeping an eye on for the rest of the week. Will I be taking these trades? Not immediately, definitely not tomorrow. I want to see some stocks show strength, either break out from these consolidation areas and hold that before I try to get aggressive. Basically, I don't want to swing at the first pitch. All right, so let's go Market Smith for AA. This one, it was in a relatively weak group, B-, metal mining and ores, 86 out of 197. But within that group, it is the number 1 relative strength rated stock and the number 3 on a composite rated. Accumulation distribution, B, kind of run in the middle there, composite rating 89. Earnings per share on this one has been extremely strong, over 1,000% earnings per share growth year over year, the last reported. Sales were up 32%, after-tax margin up 10%. You can see down 1.1% today, but let's go back to E-Trade. But not bad at all. So we actually broke out on a tough day yesterday from this consolidated area. This could have been a pivot that you played with. I wasn't focused on this stock. I had this on my general watch list, but didn't take it yesterday. Got out 4% or so from that pivot. Pushed higher at the beginning of the day today, up 5.8% from that pivot. And now we're just kind of consolidating. But this one's showing great relative strength. With higher highs, higher lows today, lower volume, and only down 1% on a tough day. So that's AA. Gotta get used to my controls, just changed them up here. Next we have ACI, this is Albertsons. Group strength rating A- on this, 33 out of 197. This is retail supermarket group. The second strongest on the composite rating, number 1 on a relative strength rating in that group. Accumulation distribution, A-, composite rated 91, and relative strength 96. So very strong there. Let's check fund ownership. Is increasing, went from 71 last June to 271 this year, so about quadrupled year over year. It showed earnings minus 47% year over year, but it did get this pop on earnings, so I'd have to check the news to see kind of what caused that. But I mean, it consolidated, broke out, and now we're just making higher highs in this uptrend. Let's try and find a possible entry point. So this was up 1.5% today. Let me measure this move. So we had that first move up 56%, Second move from the breakout, up 75. Pulled back from the top, 13%. So if this can start flagging out and we can get maybe like another kind of mini pop, and then next week this really tightens up, this might be one of the stocks that I do a pilot position on, where I put, I don't know, 2% of my portfolio, 3% of my portfolio into it, because it's been holding up. It's not in that tech group that got hit so hard today, so it's in a group that's going to hold relative strength pretty well. So not going to be taking this just with a break over today's high, anything like that, but this is a stock that I want to keep an eye on. Next we have AEHR. This is one where it's definitely too early to kind of trade, at least with my strategy, but we had that giant earnings pop, relative strength 99 on that, accumulation distribution A+, composite rating 84. Group strength is a C+, 106 out of 97. Within that group though, it has the strongest relative strength out of 32 stocks. So that's AEHR. Let me jump it here. So this is one where we had that nice gap up, pushed higher, was closed plus 30% on Friday, consolidated on, I mean, you could call it consolidation. This is still a lot of volatility, but after a pop like that, 10%, as still in the kind of upper half of the candle, showing good relative strength. And then today, down 4.3%, but it does look like we undercut the low on that gap up day. So the low there was 13.54. Today's low, 13.50, so undercut it by 4 cents. That's typically a place where if we undercut the low on that earnings pop day, some traders are going to put their stops right at that low, good shaking out. So if this can consolidate, allow that 8-day exponential moving average to come up, very little volume on the pullbacks here, so a stock that I want to be keeping an eye on. This is AEHR. Next we have AMBA. This is what I put as the spotlight stock of the night yesterday in the YouTube short, but group strength A+, accumulation distribution A+, composite rating A+, or 99, excuse me, relative strength 97, fund ownership increasing 347 to 468. Within the group, second strongest on a relative strength basis, now sixth on a composite after today kind of getting pulled back. 483% earnings per share growth, 58% sales growth, and 16.6% after-tax margin growth. This is AMBA. So this had that 74% pop or so, 70% pop after the stellar earnings it reported. This is one that I took a trade through here. It got out. I sold some into strength and then got stopped on the rest as it came back and undercut the lows right through here, which right when it turned around, I was kicking myself, but after the last couple of days, pulling back, lower lows. But doing so, take a look, on really light volume here. That's why it has that accumulation distribution rating of an A+, because the breakout days are coming on heavy volume, and then those pullbacks, the selling days are coming on lighter volume. So not many people are trying to sell, even though the market's been pretty tough. So down 2.6% today. This is one where it pulled back right on top of the previous base, or on top of the previous resistance. So if we can consolidate here, maybe allow that 20-day moving average to catch up, this is definitely a stock that I'll keep an eye on. Obviously, because I put it on the spotlight stock of the night yesterday. AMBA. Next, we have AMR. This is one I'm kicking myself because look at this nice consolidated area. After a shakeout, tightened up, and then broke out for, let's see, that's 23, over 100% gain. Group strength on this, A+. It's in energy and coal, which is the #1 relative strength rated group out of 197. In that group, it's the #1 stock on a relative strength basis and 7th out of 13 on a composite basis. Accumulation distribution B-, composite rated 75. This is definitely a relative strength kind of play. All right, AMR, no. So look at this, consolidated, nice shakeout on the 19th, and then just got going, took off. Never really gave like a nice entry point after that too, because like this popped down and then just immediately got going. Maybe you buy this, but even that day is a gap up. Are you chasing that? I don't know. I didn't. But with this, we shook under the lows of the previous 3 days, and then we still closed above the 20-day, right at the 8-day exponential moving average, holding up, down only 0.5% today. This is a lot of volume coming out here. So again, similar to ACI, not one that I want to be taking just with a break of today's high, one that I want to see flag out, something similar to the previous base here before getting going again. But it does have great relative strength. It's in the strongest group in the market right now, something to keep an eye on. Control, there we go. Next we have CEIX. Same thing in that same group. So between AMR and CEIX, kind of find your entry point, what you like better. This has a little bit better composite rating because it has stronger earnings per share and sales, I believe. Let me check sales really quick. Yeah, and sales. So if you're going with one that is fundamentally stronger, hasn't already had that breakout while still having a 99 relative strength, then CEIX over AMR. And I think, let's see, yeah, CEIX also has a little bit larger daily volume as well. So if you don't want to deal with any illiquidity issues, then CEIX. If you guys are enjoying the stream, please leave a like. It helps YouTube pass this out to more traders after it gets posted once the live stream is over. All right, next we have DDS. This is retail department stores, similar to Albertsons. This is Dillard's, A+ group strength rating, 92 composite rating, 99 relative strength. It's right in the middle of that group, 3 out of 6 stocks, number 1 on a relative strength basis, tied for 99. Earnings per share growth, 887, sales 69%, after-tax margin up 11.6% last year. Let's check fund ownership on this. Yeah, had a little dip in December, but then started getting going again, March and June. So investors paused it in December and then put it back on, showing that there is some demand. Come on, Control 3, there we go. So DDS. So this is another one, consolidated, and then got going on earnings, flagged out again, broke out. All the heavy volume days early on have been on big up days, and then we had this, I think this might have been the quad witching day. Is that Friday? Yeah. So kind of ignore that. Quad witching is messing that up. This one, consolidated, looked like it was breaking out and then just pulled back with market weakness. So this stock itself probably isn't doing anything wrong. Held the 20-day simple moving average a day. Lower highs, lower lows, but still holding that on right now. One that it's just back in space after trying to break out at the wrong time in the market. So more consolidation. This is one to watch later on. Again, not taking this just for the break over the previous day's high. I got 6 more for you guys, but if you have any chart requests, drop them in the comments and we'll get to them. I see GNRC, NVDA, CRK, and KNX right now. So outside of those, I have Tesla and AMD set up. So anything else that you want to see, drop them in the comments. And DOCS, I see that as well. All right, let's go FULC, FULC. This is a trade that I absolutely screwed up. Strong breakout, 320% or so. Pulled back, undercutting some lows, and then we had this nice like 3-day pivot right through here. I took the trade immediately breaking out, and then right after it broke over that area, it reversed lower, took out the low of the day, stopped me out, and then reversed again and went for like 11%. So I was super mad when I saw that, but you have to stick with your stops, have to respect risk, and that's fine because just 3 days later, it checked back, undercut that low. Now, this could just be a bear flag. So this is one where you could trade it kind of both ways depending on which way it breaks out. We're consolidating through here. If we break under the low, this has a large gap and not much resistance below here. So that would be a 23% move down back to like the previous flag. So this could be one where we pull back, bear flag, it breaks down, or this is showing decent relative strength compared to the rest of the market today, up 1.5% while the market was down 2.8 in the NASDAQ. So maybe a break over Thursday's high, 28.35 is buyable. I would like to see this now with the market. I would like to see this go without me. If it breaks out and holds, that's great. But this is, let me check, make sure. Believe this is a pharmaceutical. Yeah, so biotech. Biotechs don't always go with the market, kind of does its own thing at times. So a little bit of cautious with that. All right, next we have Robinhood, HOOD. Group strength right now, C+, pretty weak. But the stock itself went through that massive like squeeze or whatever went on there, pulled back, broke out on heavier volume, consolidated, and then we'll get to the chart in a second here. It has good sales numbers, over 100% growth the last 4 quarters. This is more of a momentum play. Let me get to it. 3. So yeah, just starting to carve out the right side of the base here. Got out on heavier volume, pulled back, broke over yesterday's high. So I know I saw a bunch of people saying, okay, we're putting this on. It's showing good relative strength in the morning. If the market turns around, this is showing great relative strength. Then we got a nice low entry point. But it pulled back lower, bounced to the 20, closed still strong on the day, only down 1/3%. So this is one where not taking the trade immediately, but showing decent relative strength as it builds out the right side of its IPO base here. HOOD, Robinhood. Come on, Control 4. JYNT is next. Let's check this one. Nice strong uptrend with here. Relative strength 99. Group strength B 69 out of 197 in medical services. It's the 4th composite rated stock out of 42. Number 1 on a relative strength basis. Always a good sign. Accumulation distribution says D-, but it's hard to see that with the chart. It's not like very obvious that the higher volume days are selling days until very recently. But even on that, it's consolidating, flagging out, still above the 50-day simple moving average. In growth stocks, that's kind of a win at this point. Composite rated 89, fund ownership increasing 157 to 298, about 100% increase in funds year over year. Earnings per share, yeah, that caught my eye too. The last 4 quarters, all over 100%. This most recent quarter, year over year, was up over 1,000%. Sales up 61%, after-tax margin up 13.3%. Keep doing that. All right. Nope. JYNT. So this is, yeah, kind of all over the place, but holding up relatively well over that 50-day simple moving average. I guess on E-Trade, it's easier to see the heavier selling volume days recently. Probably put that, what was that rating again? D-. That still seems pretty low, but yeah, with this, just looking for a break over yesterday's high as some signal of strength. That would get it over the 8-day, over the 20-day. But again, I'm being very cautious in this market. Don't want to do anything too soon. Next, we have LAC. This is one that has been on some previous breakout watch lists that I post every Sunday morning. Nice kind of cup, and now we're putting in the handle here. Good to see. Inside day today, down 5.3%. Pretty heavy, but on lighter volume than yesterday's up day. So zooming out, you can see the nice cup, putting in the handle. Needs a little bit more work, but if we can get over some of these daily highs, maybe yesterday's high, 22.46, this kind of volume is the opposite of what we saw in JYNT. So I'm sure this, don't prove me wrong, is going to have a better accumulation distribution rating. Yeah, B+ here versus D-. Weak group B- there. Metals and ores, just like AA, 86 out of 197. Fund ownership has been increasing, and second strongest relative strength in that group, and kind of middle of the road on a composite basis, just because it has negative earnings per share right now and doesn't report sales or profits. So it can't really make the fundamental case for this stock yet. But obvious cup and handle, let's keep an eye on it. Last one that I got, and then we'll go through the requested stocks. We have TECK, Tech Resources, another metal and ores. So you can see what's holding up best is not tech. It's mining, it's grocery stores, retail, stuff like that. Are those stocks that are going to break out another 100%? Maybe, maybe not. But that's what's holding up right now in the market. And that's what we have to work with. Group strength on this, B-, composite rated 95, which is nice to see. Accumulation distribution B. It's the number 1 stock out of 37 in that group and number 12 on a relative strength basis. Similar kind of cup right now and working on a weird handle, I guess you would call that. Earnings the last 2 quarters up 259, 271. Sales accelerating from -25, -4, +7, +49. And after-tax margin improving 6, 10, 13, 13. Let's check fund ownership on this. Steadily increasing, 850 to 922. This way. All right, and then for this last one, TECK, there's your cup. Let's measure this pullback here, 16%. So right now, ATR, average true range, measuring those daily bars, are gonna be all over the place. Right now is not the time to press with any swing trading if you're a low risk trader trying to use tight stops, because the volatility is there. If stocks are going to be bouncing, they're going to be bouncing heavy. If they're going to be pulling down lower, it's going to be over a 4%, 5%, whatever a typical low risk stop would be. So unless it's the perfect setup, and we've seen a couple like stocks break out, definitely trying to be as cautious as possible. I'm 100% cash right now, being transparent here. But these are the 12 stocks that, these are the 12 stocks that I found that were holding up the best relative strength in strong groups and some kind of mix of ownership, earnings per share, something like that using MarketSmith. All right, so those were the 12 stocks that I wanted to go over. Looking at the comments here, I could see what you guys want to see. So let's go through NVDA, and I'll jump back. So here we have NVIDIA breaking under the 50-day simple moving average. NVIDIA has been like the main true market leader for very liquid growth stocks. It was Tesla up until February. Then Tesla pulled down, still not at all-time highs, while NVIDIA did break into all-time highs in May and June. So the fact that we're closing under the 50-day simple moving average on decent volume, not crazy, is definitely a warning sign for the market itself. Now, is it similar to kind of this earnings day where we close under one day and then just pop? Earnings aren't coming up, so that's not going to save NVIDIA unless something saves the market as a whole. This is definitely a yellow flag, if not a red flag for the market. Let's see, what is this down off the high? Only 11%, but do you want to give away all those gains? You have to respect your risk and manage accordingly. NVIDIA is something that I would want to own if the market holds up here, but this initial break of the 50-day, let's keep an eye on this if we get a second close under the 50-day. It's NVIDIA. Let's see, what else you guys got? GNRC. This one's holding up a little bit better, basically right on that 50-day simple moving average. Monday, Tuesday last week, then we bounced, same story. Yeah, this is holding up well. Let's check MarketSmith, just so. GNRC. B+ group strength, 97 earnings per share, accumulation, distribution, D+. So people are selling recently. Composite rating, 97, fund ownership increasing. Composite rating, 2 out of 33 in that group. Same with relative strength. Great earnings per share, sales, margin. Yeah, these like NVIDIA, GNRC are stocks that you don't want to like quickly give back, but it depends on what your style of trading is. If you're just like a swing trader and you're not trying to hold this for over a year to get those tax advantages of long-term gains, then maybe you sell here, buy back after it's showing strength. I can't say buy, sell this stock exactly. I don't want to give financial advice. But the way I handled everything, even with Upstart today, I sold that, just wanted to get 100% cash, kind of take a step away from the market, let it figure itself out before I try to get back in and start getting aggressive. But GNRC, NVDA, Upstart, stocks that you don't want to be giving back as quickly as possible, but depending on your risk management. All right, that was NVIDIA, DOCS. This is one that, rough candle. What was it down today? 8%. One that I had traded a couple times, pretty profitably, did well on this 2-day pivot, broke out, sold into strength. It's a stock that I have on my whiteboard. I can't move the camera, but I have on my whiteboard, true market leaders, stocks you want to own. And today was a rough day. Definitely a yellow, if not red flag, closing down 8% on heavy volume. Accumulation distribution now is a C because of that. Let's check the E-Trade chart. Yeah, so this kind of similar to what we saw in FULC. We gap down, consolidated, bear flag, and then just push lower on heavier volume. So there is a decent, let me throw on volume profile. Let's see, studies, all studies, volume profile. I don't know why this got taken off. Yeah, so see, we were consolidating right at that main part of the volume profile, and then we just flushed lower. So one last kind of stand here. We have the 50-day, a period of consolidation before, and if that breaks, things get even more ugly for DOCS. So, yeah, not one that I would be like buying right now. It's showing weakness. I wait for buyers to step in, prove that there's some support, and then buy on the move higher. So definitely trying to reduce risk when it broke under the lows in this area, DOCS. All right, what else you guys got? If you guys are enjoying the stream, please leave a like. I said that earlier, but it does help me out a ton with YouTube. All right, let's see, DOCS, CRK. Super strong. Let's see. Good volume, so it's not illiquid. 112%. So this could be the first high tide flag that sets up while the market's pretty weak. Let me go to, and that was CRK. Oil and gas, very strong group strength, A+, 9 out of 197 within that group, 7th strongest stock. How is it only 17 out of 60 on a relative strength with a relative strength of 97? That group must be incredibly strong right now. Accumulation distribution, A on the stock, composite rating 98, over 1,000% earnings per share growth, 91% sales growth, 17% after-tax margin growth. Fund ownership going from 139 last year to 209 this year. Yeah, this is definitely a stock to watch. Thanks for bringing this up. C. Smith. Awesome. KNX, transportation and trucking, B, relative strength, accumulation distribution, C-, composite rating 91, good earnings per share, 65, 71, 89, 72, that's what you like to see. Sales steadily increasing, 1, 7, 9, 24, after-tax margin increasing by double digits. Let's check fund ownership while I have it up, 992 to 1150, relative strength rating, kind of middle of the group. What else is in this group? View stocks in sector. Oh no, in industry. ARKK, let's check relative strength rating. PTSI. So yeah, this is what I love about MarketSmith is you see a strong stock, you're like, okay, this is a good setup. Let's check the strongest stocks in the group if that doesn't have the strongest relative strength, because we always want to be trading the strongest stocks as swing traders. We always want to be getting our money into the strongest stocks, into the strongest groups. And with MarketSmith, it's as easy as you go to a stock, you hit view stock and industry, and then you pop up the list and you just, boom, you can click through them. You can even have it like autoplay for every like 1 minute or 1 second. It's pretty sweet. I'm still getting used to MarketSmith, but I'm blown away by it. All right, let's see. So, sorry. You were KNX. Okay, so yeah, doing all well there. Let's check it here, see if we can find an entry point. KNX, Night Swift. Yeah, about 1 million shares traded. Good shakeout, consolidate. This is another good one. Yeah. C. Smith crushing it with the two stocks to watch. Let me write down both of those before I get out of the chat. CRK, KNX. Thank you. All right, what else we got? ZI. Yeah, I had ZI on my breakout watch list, and it just never broke over the previous day's high, which was nice. Never broke over that 2-day pivot or 2-day high that I was looking at. So thankfully, I didn't put the trade on myself. But man, look at this. Just a clean break of the 20-day on heavier volume. Bounced a little bit, like, okay, the market's back. And then we gapped lower, pushed even lower, down 6% today on heavier volume. And we're under the 50-day, first close under the 50-day. And we have a little bit of a volume shelf left for resistance around this area. Oof. Yeah, I mean, I don't know where this goes, but I don't want to be buying like immediately on this 50-day. I know in the video I said, okay, it's been pulling back, respecting that 20-day, but we never kind of consolidated around that 20-day, and that was a warning sign when we just shot through it and still closed under. Yeah, I'm not seeing an area to really kind of get into respect risk at this point, so I want to let it go, let it flag out, because after a press down like this, 13%, there's going to be a lot of people trapped at these higher prices. So when the stock does bounce, you get two groups of people that want to sell the stock. You get the people that bought on the 50-day that are up 13% in a really tough market, that want to take some profit on the way up. And then you also have the people that are trapped at these higher prices that want to get out for break even, so they don't have to mentally say, oh, that was a losing trade. I was wrong for putting that trade on. Here's a hint. You should be cutting your losses as quickly as possible. A losing trade isn't a bad thing in trading. A big loss is a bad thing in trading. So cutting those losing trades as quickly as possible so you're not one of these traders trapped at these higher prices, waiting for a bounce back, hoping for a bounce back. But there's going to be a lot of selling up in this area if it does bounce. So that's why I want to see it kind of flag out, tighten up before a breakout later on, if that makes sense, with ZI. Zoom info. All right. Zoom. Oh, Z. Let's see, Tim, you want to see ZM? Zoom video conference? I'm not seeing ZOOM. I think they got rid of that ticker because people thought it was Zoom. But Zoom, yeah, this is a stock that I don't want to own. Anything under the 50-day, anything under the 200-day. Not stocks that I want to be owning. Similar to why, like ZI, look at this huge volume shelf. Tons of people are trapped at these higher prices. So, I mean, this would be a huge gain, 39% or whatever, but you're going to see any pop kind of sell off and flag out here until there's some major news to change this, if that's what you were talking about with ZM or Zoom. DATS, whew, interesting. Let me write this down just because it's showing great relative strength. Let's jump over to MarketSmith, get some information about this stock. DATS, DATS, DAT Chat, A+ group strength rating, internet content, 13 out of 197. Let's see, in that group, number 1 out of 70, relative strength. Number 18 on a composite, 99 relative strength. Interesting. Provides communication software and messaging platforms to consumers. I don't know if I've used this product before. Let's see what else is in its group. No, relative strength rating, shoot. Okay, SEMR, Snapchat, that's what I'm familiar with, but IPO, I mean, this is taking off. It's not the right point for an entry or anything like that. Super strong, obviously, out the gates here. So consolidated. You had this 2-day pivot right through here where we pulled back after a false breakout, tightened up, and got going again. That would have been the only entry point, 80% up. All right, so similar to CRK, excuse me. This could be a high tight flag in the making, where it goes 90% or more in 8 weeks or less, then pulls back 25% or less, flags out, and then we get a stronger breakout. But I don't want to be putting on a trade as the stock's 80% extended from the breakout point, especially in a tough market. Anyone who's in this, who just lost 10% in I don't know, DOCS or any other growth stock, they're probably going to be taking some profit here, so their overall P&L isn't destroyed. So that's the tough thing about this market is similar to what I said about Zoom Info, ZI. Right now there are groups of stocks, a lot of growth stocks that got absolutely hammered today, right? So a lot of people are down a lot of money if they didn't use stops, didn't have risk management kind of set up at the lows of the day or anything like that. So those people that are down a ton of money, now it shifts to any breakouts that happen, any stock that's up 10% that they just got in, they're going to be trying to flip those stocks to get a little bit of money, soften up their P&L, make it look like they didn't lose their shirt on a couple different trades today. So what you're likely going to be seeing is a lot of chop in the market if we don't just flush lower. So any kind of breakouts that we get, people are going to be quicker to take profit, soften up their P&L, and you're going to see more and more chop. And as a breakout trader, swing trader, that's kind of the worst environment for me because I get in on the breakout. If people are selling basically right at the breakout, chances are I'm going to get stopped out as it sells down. So I don't really want to be trading in this market. So I'm going to be very, very conservative with any trades that I do put on, and kind of be just watching at this point. All right, next we have Tesla. Got to go over that. Tesla's holding up really well compared to the rest of the growth stocks, working on that right side of the base. I had this on the breakout watch list, I think, last week or so. I didn't have it this week, but we pulled back, tightened up, and then Friday, that was when everyone on FinTwit said, okay, started a position in Tesla because we took out the low on Thursday, bounced at the 20-day, pushed higher on good volume. Got some great follow through on a tough day Monday, showing great relative strength. And then today, slightly lower lows, lower highs, still above the 8-day, and did so on lighter volume. So out of all the kind of growth stocks, Tesla's working on the right side of its base and holding up really well. So something to watch in the next couple weeks. AMD, this is the stock I put on a full position yesterday. I had this on my breakout watch list video as well. This is one that it looked like it just tired everyone out. We had an undercut of the first pullback. I took this trade as well through here, this 2-day pivot. Then we pulled back again, undercut that low, basically shook everyone out, reclaimed the 50-day, inside day on Friday, broke out on Monday after undercutting the low on Friday. So I bought with a break over Friday's high, and then just got stopped today on everything. Huge volume coming down. I don't know if this was a bull trap. It looked great. I think this was just an aspect of the market. It just flushed today, but we're under the volume shelf, under the 50-day, closed at the low of the day on heavy volume. Not something that I want to be owning. All right, we're going to give the chat maybe 30 seconds to put any other stocks that you guys want to see in there. Otherwise, I'll start wrapping things up. Thank you so much for tuning in. I know it's not the most exciting thing to come into saying, okay, all the stocks are down. We're looking at 10 stocks with good relative strength, but we don't plan on trading anything. I'm sure that doesn't get all the viewers excited, but trading shouldn't be exciting. Trading should be finding your edge, working the probability, and just applying that over and over again so you manage your risk and you can make money. It gets exciting when things are good. It gets exciting when things are bad, but we want to go into each day with a plan, how to manage the risk, because in the end, it doesn't matter if we're right on 100 trades in a row. If we go all in on that last trade and we're down 50%, 70% or something, you can blow up your account. So it's always about consistent risk management. And right now in the market, it's time to be applying that more than ever. All right, I don't see anything else in the chat, so I'm just gonna wrap it up here. Thank you guys so much. If you don't have a brokerage and you want 2 free stocks, you can use the link below to get Webull. I use Webull just for kind of my long-term investing, but I use TD Ameritrade, E-Trade, you can see here, and MarketSmith all the time. If you guys enjoyed the video, please leave a like, subscribe to my channel, and I'll see you guys. I got a video coming out on Thursday, so stay tuned for that. Not a trading video, but a money video, money interview. So take care, protect your